So let me give you a proper perspective here. In 2015, we had 1,108,932 homes active on the MLS. Today, we are, for the week of May 12th, we are at 424,190 homes on the market, and demand that's substantially higher. Hi, I'm Beata Bukowski, coming to you with our weekly economic update. So yes, we are gravely under inventory levels, and demand, despite what's happening with mortgage interest rates, remains very high. Speaking of those mortgage interest rates, they did take a climb up last week. We were getting close to a 7% 30-year fixed rate, and that's all thanks to the climbing yield on the 10-year bond. The 10-year bond yield typically is a very good indication of where mortgage interest rates are going. So if the 10-year bond is dropping, mortgage rates are getting better. If it's going up, mortgage interest rates are going higher. One of my favorite economists, Logan Mahtashami, has come out last week with some revisions to his predictions for 2023. At the end of 2022, he talked about the yield on the 10-year bond being between 3.2 to 4.2%, and that translating to mortgage interest rates between 5.75% and 7.25%. Right now, he is saying that he believes that the 10-year is on its way, one day this year, to a 2.7% yield, and therefore mortgage interest rates hitting right below 5%. So let's keep our fingers crossed for this housing market may get a substantial boost with these interest rates being lower. In other news, existing home sales fell 3.4%, and this actually goes right in line with what I just shared. There is not enough inventory, not that demand subsided. Bottom line is, inventories are extremely low. Normal supply of homes is about 4 to 6 months. We are just under 3 months of supply. Homes stayed on the market for an average of 22 days, which is down from 29 days in March. 73% of homes sold in under 30 days. The only homes that are staying on the market are homes that are probably a little overpriced. Median home price has dropped 1.7%, down to $388,000. Median means that less homes sold above that price than homes below that price, which speaks to affordable lending and pushing affordability to those buying in the lower income bracket margins or in lower income brackets. National Association of Home Builders released their optimism report, and their number is over a 50-point reading. What does this mean? Anything above 50 is considered expansion. So home builders are feeling very strong about the prognosis for the coming months and year, knowing that there's more demand, knowing that there's more traffic, and knowing that the sales expectations are going to continue happening. Jobless claims are, while they were down a little bit last week, continuing claims, and this is what's important, are have risen 500,000 since their lows in September of last year, which speaks to yet another indicator of slowing economy and a recession on the horizon, because employers are slower to hire. Weakness in manufacturing has also been reported last week through the Empire State Index, and that has declined sharply, down 31 points. So manufacturers are seeing less demand and seeing less production already happening. Meanwhile, retail sales rose 0.4% in April, but that's not so much because there were more sales, but because of prices and price pressures by inflation. So if we adjust for inflation, we have retail sales falling 4%, and that's the lowest reading in the last 6 years.